This is Business Incorporated with me, Bosin Amafaye. We're live to you from Lagos, the headquarters of Channels Television. Coming up today, the U.S. Securities and Exchange Commission finalizes rules to rev up public offerings in the U.S. market. Meantime, Saudi Arabia is opening doors to international tourists for the first time as part of efforts to reduce its dependence on crude oil. And Volkswagen is using Rwanda to test run a new ride-hailing business. Let's talk about the markets in Africa, everyone. Shall we start from there, where we have a mixed intraday Friday with the Nigerian Stock Exchange reversing Thursday's gains down about 0.5%. In South Africa, the GSE Offshore Index gained a marginal 0.01% intraday, and the Egyptian market closed for the week Thursday, positive 1.93%, despite those protests there that the government's trying to contain. In Kenya, the South African big stock market closed negative on Thursday. That's wrapping up, as it were, the African markets for the week. Where are we? The markets in the Middle East, the Gulf region, ended the week negative on Thursday, with the Abu Dhabi index taking the heaviest beating, down 0.37%. Dubai's index closed about 0.15% lower, with most property stocks drifting into negative territory. Elsewhere, Qatar's index also slid 0.20%, while the Saudi's Tadawul index ended flat by 0.03%. And of course, you have the European markets trading cautiously today, and the London market also shy of its colleagues. So let's go to London first and try to find out how it's been a very interesting market week. My colleague Juliana Olayinka is standing by at the moment at the London our studios in London to give us a sense of where we are at the moment. Juliana, it's been a very interesting week. It's good to have you back on the show. So let's start from the business story around Poundland, saying it's changing its name to Pepco and all of that. Was this a story, and is it an exciting one?
It's pretty exciting, especially if you like skimping on how much you spend on your clothes. Now, Poundland are trying to survive in this kind of tumultuous, very cutthroat high street industry at the moment. Of course, there have been several store closures and relegations from the FTSE. And Pep & Co are a discounted clothing brand. And now, earlier this year, Poundland, the discounted retailer, they announced that Pep & Co will be visible in more of their stores. So rather than just getting some of your kids' books and pens and aftershave, etc., you can now get clothes. And most of their clothes will be around 99p, which I think is about 400 naira, and none of them will be above £10. And they said that they're doing this because they really want to compete with the likes of Primark, ASOS, and Topshop even. So, yeah, this is good news for them. And, of course, we've seen if a high street brand is not ready to modernise, it will be difficult to survive.
Well, it's good news for consumers if you got something cheaper, and if it's quality, UK shoppers will need that for kids going to school and all of that. So consumers always good to look for good bargains, and I'm sure you're one of them.
Absolutely.
Value for money. That's it all about the consumerism. I know. But it's been a very busy week so far. Juliana, from Thomas Cook to the PM Johnson story. This is getting past lunchtime, as it were, in London. So how is it all getting wrapped up this week at the city centre?
Well, it's quite interesting, actually. The FTSE, as we spoke about this morning, it's being boosted by the decline in sterling. But let's have a specific look at those numbers. The FTSE all-share intraday is up by 0.95%. The FTSE 100 also up by 1.06%, which is massive. And the FTSE 250 is up by 0.55%. In currencies, the British pound, that's down on the US dollar by 0.20% today. Also down on the euro by 0.31%, and sterling is up on the Japanese yen by 0.13%.
Okay, so any idea what to likely grab the headlines next week, Juliana, from your market space?
But of course, messy Brexit, as I know you like to put it, Bosun, rumbles on. The countdown really is ticking, and we've got to get it sorted out as soon as possible. So I'm sure there are going to be lots of headlines coming out of Westminster for us to keep ourselves busy over in London. And of course, it's those purchasing manager index figures, which are the PMI. We've got them in construction, services and manufacturing. These will be significant because, of course, next week we're heading into October. So Q3 is really wrapped up. And we know in Q2, the British economy contracted. Some of ifed and ahed on whether or not we're heading into a recession. We know technically a recession is if 2 quarters you see a contraction. So I'm sure we're going to be very busy looking at those numbers, because if they are negative, then really, you know, Britain will be in a recession and we'll all be heading to Pep & Co for our clothing.
You need to just relax and take all of this in your stride, Juliana, and the rest of the team in London. Thank you so much. It's been a very great week sharing the shows here with you, Juliana Olayinka, out of our London studios. Thank you so much.
Thank you, Bosun.
So it's dinner time already in the Asia-Pacific region. Stock markets were mixed on Friday as investors watched for developments on the next level of U.S.-China trade front. The Shenzhen Composite was up about 0.89%, and the Shanghai Composite, which is much bigger, added about 0.11%. In Hong Kong, the Hang Seng Index slipped 0.3%. The broad 225 Nikkei for the Japanese market slipped about 0.75%, while the Topix, which is much smaller, index shared 1.17%, a bit of a slippery Friday for the Asian markets, wrapping up the market week. And in about an hour or two from now, the U.S. markets will be the opening bell, but the futures were slightly higher ahead of that Friday morning, with Dow futures indicating a positive open of more than 56 points. Futures on the S&P and the Nasdaq were also slightly higher. You can see the numbers there on your TV screen. Looks like a very decent Friday morning opening call for Wall Street. Sticking with the U.S., the Securities and Exchange Commission says it's finalized a new rule that will allow all companies to privately sound out prospective investors before they file for a stock exchange listing. That sounds really nice. The so-called testing the waters, or dipping your fingers in the water, which currently only applies to smaller companies preparing to go public, will now be extended to all prospective issuers, hoping to gauge the broader market's interest, or what you call sentiment, before filing registration statements with the SEC for initial public offerings. The move is part of a broader push by the SEC chairman, Jay Clayton, to make it easier for companies to go public in the U.S. amid worries that 50% decline in U.S. listings over the past 2 decades is hurting investors. And Saudi Arabia is saying, welcome to all of you. This is throwing its doors open to international tourists for the first time as part of the kingdom's effort to reduce its economic dependence on crude oil. The kingdom is launching a visa regime for 49 countries and relaxing strict dress codes for female visitors. So Saudi Arabia is hoping, therefore, that tourism revenue will increase from 3% to 10% of its GDP by the year 2030. Under the new plan, Saudi Arabia wants to increase international and domestic visits to 100 million a year by the year 2030. The Saudi government expects to create 1 million jobs in the tourism sector. Interesting. So let's come back home to the African continent, where the IMF has concluded its Article 4 consultation and discussions with Zimbabwe. The struggling economy, according to the IMF, needs to intensify efforts on economic and political fronts as the government faces growing criticism over its commitment to those reforms. According to the reports released yesterday by the IMF, policy actions are urgently needed to tackle the root causes of Zimbabwe's economic instability and enable private sector to lead the country's economic growth. The Washington-based IMF explains that the key challenge for Zimbabwe is to contain fiscal spending consistent with non-inflationary financing and tighten monetary policy to stabilize the exchange rate and start rebuilding confidence in the country's national currency. The Southern African nation is feeling the effects of a drought that has hit crops and electricity generation, while soaring prices and shortages of foreign currency and fuel have sparked anger among a population getting restive by the day. Checking the global oil markets with us, where we're heading for a weekly loss, way down by slowing Chinese economic growth that dampens the demand outlook and a faster than expected recovery in Saudi output and the repair of those facilities. Hit about 2 Saturdays ago. Brent crude fell 6 cents to $62.68 a barrel, while the U.S. crude, that's the WTI, was up 18 cents, trading $56.59 in continuous trading. But both benchmarks were down 2.6% on a weekly basis. The International Energy Agency says it might cause its growth estimates for global oil demand for this year and 2020 should the global economy continue to weaken. We're sticking with the markets. This time we're going metals. And the king of metals, gold, prices fell Friday early today and was on track for its third weekly decline for the month, restrained by a slew of U.S. economic data that beat expectations and the U.S. dollar holding its multi-week highs against major currencies in the basket. Spot gold fell about 0.5% to $1,499.22 per ounce, while U.S. gold futures were down 0.6%, a little bit lower at $1,506.01 per ounce. Silver, the poor man's gold, that's another name for silver, by the way, fell 1.34% to $17.56 per ounce. Platinum was down about 0.2% to $928.34 per ounce, and palladium down about 0.5% to $1,659 per ounce. Quite a lot there, as you can see, from the global commodities market. So, what is this all about? The banking strike in South Africa, which was earlier planned for today, has been postponed. So, what is in it for those who want to strike, and why is this strike important? But again, why was it postponed? We're talking to one of the South African journalists after the break. We're back, everyone. Stand by.